Assalamu alaikum. Have a good day. Welcome to Certificate General Accountant CGA. So we are going for taking the case study. It is the final level S24. So if we see our case study paper, we have three basic items here, but three topics: financial information analysis, weight is 35, and also we have the strategic, operational, and ethical analysis, weight is 35. Another one, effective summarization, is 30. So is the case study. There is a huge matter, that means overall subject. We have 24 subject. So all summary within this case study. So here, financial information analysis. If we see the syllabus in our CGA paper, we will see the subject matter assignment, assigning organizational framework, then financial data analysis, then financial statement analysis. And if we see the strategic, operational, ethical analysis, there are and topics is applying discriminator, ethical analysis, and also effective, that means here concluding complex problem, time awareness, and relating parts of the whole, all overall item within this three item. So here, as per the syllabus, they are recommended to materials, but basically this is all available in the website. Also soft copy I will mail you. So here, these two items is not for all the our case study, is just for the academician, but our case study is more or less is the totally business oriented, and different types of business we have to understand. So today we are going for discuss, as we call is Module-01 Financial Information Analysis. So here these items all are for the academicians, but we will discuss what we need. Look here, ethics, business ethics. So within the organization, if we go for surviving the organization, and each and every organization have the mission and vision and goal. For achieving that mission, organization are working, that means operating activities are doing, and ethics is a major part within the organization, because if ethics is okay, then that organization can run or survive, that means they can achieve their goal purely. So we know what is ethics. Ethics, they have the 5 code. That one is integrity, objectivity, professional competence or due care. As an accountant, we have to follow that type of ethics also. And confidentiality and professional behavior is the must for an ethics. It's the code of ethics. If we go for the IFAC code of ethics, we also see that type of item here. CS, CMA, CS, or globally internal audit or CISA, everywhere we will go. The code of ethics is that integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. So how do we develop a code of ethics within the organization? We have to develop it. That means increase the corporate value, ethics and cultural matter, corporate governance, establish the corporate governance within the organization. And we have to find out the right people for the right place for the organization, and we have to establish the corporate governance within the organization. Though corporate governance, we have the corporate governance code 2018, for the Securities and Exchange Commission, but it's only for the listed companies, not for the overall companies. But if any company willing to that means follow the corporate governance code, it is most welcomed. But I think near future we will give corporate code, because in our country, there are establishment, or that means FRC, Financial Reporting Council. under the Financial Reporting Act, passed in 2015, already established FRC, Financial Reporting Council, and they start working. They are the super regulator of accountant, auditors, and financial side. So that is working. So we'll discuss later on. So here, a professional experience and work experience of any experience, that means we all are experienced person. You are all of the experienced person. Here you have the partly qualified CA, CMA, CS, and so some are ITP holder, and all are working in organization. You have the practical experience. So you're that practical experience and the professional, that means this education, all will help to develop your career in future. So in our country we have CS, CMA, CS, now also the CGA, and also qualification we have CISA, CIMA, SCCA, etc. all. But all profession, with the due respect, all are the separate, because here we are the CGA, Certified General Accountant. CA, they have the separate entity. CMA, they have the separate entity. CGA, separate entity. So this is the new institute. So in future, that institute will go long away. So you are the person who will take the leadership in future. So here, so we need the analysis for that type of, there are different types of analysis, sensitivity analysis, valuation method, that type of tools we are using in corporate side. And here if you see, there are different types of data set, data driven analysis tool we are using. If you see this picture here, data collection and that means reinvestment, and collecting data, that are the way they using, that is the flow. So here we are saying that we need to valuation for proper case study, because case study is a 4-hour examination. So different types of case may be happen. So here some logical thing. So valuation methodology, we have to understand all valuation methodology. Here we can evaluate a different way. That means now some are net asset valuation method, maintainable profit method, or discounted cash flow method, comparable company market multiplier, price earning multiplier, markup or sales multiplier, an industry valuation benchmark. That type of tools or method we will use in our valuation side. Look here, if we see what are the main valuation method, it is our norms that we know the DCF analysis. When valuation of company as a going concern, there are three main valuation method used by industry practice. So what is that three main valuation? One is discounting cash flow analysis. Another is comparable company analysis. Another is precedent transaction, or the previous transaction. So here, if we see the DCF's analysis, so if we look here is one of the, just for example here, and year after projected cash flow, that for example, if we go for a capital budgeting analysis, we are using different types of technique there. Some are NPV, IRR, profitability index. That means also sometimes we are using the payback period, sometimes discounting payback period. So based on that, if we go for take an project or any new venture, that we have to calculate is to the projected financial statement, and cash flow is one of them. And also we know in our accounting standard, we know we have the IFRS, the fundamental accounting standard. So and IS 1 para 10, they are mentioning that there are 5 components in financial statement. We know it. So all 5 components we have to prepare. As an accountant, we are in general accountant here. We have to prepare that financial statement, and we know it. The auditor only the certified and accountant, they are preparing the financial statements, though we have the misconfusion in our society, and sometimes they are saying that auditors are preparing double set of financial statement, but it is true that auditors are not preparing the financial statement prepared by the management, and auditor only certify it is true or fair view or not. So we know it. So here when we go for the discounting cash flow analysis, we have to prepare the projected cash flow or also free cash flow. So what is the difference between cash flow and free cash flow? We know cash flow and free cash flow, and we also know the cash flow is that is dominated by the International Accounting Standard 7 IS 7 cash flow statement, and there are 3 components within the cash flow. We know it. One is operating activities, another in investing activities, another in financing activities. And also we know the cash flow are preparing in 2 methods. One is direct method, another is indirect method. So what is the direct method and what is the indirect method? What is the difference between direct and indirect method? Direct method is that all activity, receive or payment, that was come and out of taka and or money, that preparing within that all receive payment based on that. But indirect method, they start from the balance of profit and loss account. We know it. You also the all are the professional here. So indirect method start from the balance of profit and loss account and add back with that amount with the non-cash item, for example depreciation, amortization, etc. And based on that, what result we get, this is the cash flow. And also you know in our securities law there is a provision. If you see the price sensitive information, there is one of the component that operating cash flow per share have to declare it. So why that type of things? For example, if we run in a business and if your sale is huge, but all are credit sale. So if you go for the credit sale, your cash flow, that type of that sale, huge credit sale, that cash flow can be sometimes negative. Operating activity can be sometimes negative because if you do not receive the amount from the debtors and all item you are just only for the credit sale, so your sale is huge, all is okay, but cash flow is negative or that's nominal. So that's why operating activities is okay or not for understanding that for decision making by the investor in capital market. That is the another rule is that we have to published, you have to circulate price sensitive information is that net operating activity, net cash flow per share, also operating cash flow per share have to declare it. So it is the very must item is that free cash flow. So what is the difference cash flow and free cash flow? Cash flow is the summary of 3 activities. We know it. And free cash flow is that if you have the commitment or the organization have the commitment for payment some amount for the project and other fixed asset or other thing, that commitment should be reduced from the cash flow. And that commitment will deduct from the cash flow. And that cash flow well we will get, that is the free cash flow. There is no obligation with that cash flow, so it's called the free cash flow. So this is the also item. Sometimes that type of question can be happen in our case, that means case study. Sometimes theoretical, logical, different types of item. Being we are the professional, we have to understand all item of the business side. And also another thing, what you are doing all should be the align with the business goal and activity. All IT enable everything, all should be within the organization, align with the organizational goal, mission and vision. So here we have seen it's that here discounted cash flow valuation. It is also one of the item. So here what is seeing here, earning before interest tax of that is the one of the calculation for the example, and another compare to for example here market data, financial data, valuation, compare each and every item and compare to the valuation transaction, etc. There are different types. So we can say that there are three main approach of the valuation, business valuation. So valuation of business or asset, there are three approach. One is cost approach, another market approach, another discounting cash flow. So what is cost approach? Cost approach, cost to build or replacement cost. So this is the cost approach. Cost of build. If we go for a project, so what would be the cost of total fulfillment of the project? So that is the cost of the build of the project. It's a building, machinery, etc. all within the project. And if you have the machine or other things, you want to replace it, also a project. So replacement cost also the cost approach. So another thing, market approach. It is the relative value. So what is that? Public company comparable. The market value, for example, if you want to buy merge or merger or acquisition in one of the company, if that company is the listed company, so you can easily calculate the valuation of the company, because per share value, market value multiplied by number of the share that offloaded, so total market capitalization or value you can find out easily. But which is not listed, so what you have to do, you have to, there are different types of item we have in our valuation. IFRS 13 implemented that for the valuation of the item. So here public company comparable and presence transaction, based on that can market approach can be valuation method, we can use it. Also another one, discounting cash flow. It is the forecasted future cash flow that discounting, and based on your cost of capital, that means ratio, then we will get the discounting cash flow value. Then we can be for example, it is the generally we did it in our NPV calculation, IRR calculation, PI calculation. So it's also is the valuation method. And for analyzing the business analysis, we should understand SWOT analysis, best analysis, most analysis, different types of analysis. What we have to understand all things, basic formula, basic item, because our case study in it can be different types of analysis can be happen. If you see in our local ICAB's business valuation is the final part, that means our case study part, you will see different types of item. Sometimes that case study can be 12 page, 13 page, 18 page, 20 page. So what will happen? 20 page or 15 page your question. So what would be your answer? So you have to study all thing, because 1 hour for the study and 3 hours for the exam. That's why 4 hours with the case study. And if you go start, then it will be, that means you will be get the result also. So case study is the basically all combination of your all papers. So we have to understand the decision, different types of tools. Also we need to risk management tool understand, and different types of risks we have to calculate in different way. But one thing is that all will not come within one question. It can be different in different question. So here, first we have to identify the risks of the organization, but also what type of project we are going for taking for the organization, what would be the risks, and that we should analyze it, and how we will be manage it, and continue how we will monitor that risk. So we also know that we cannot stop the risks, but we will be able to shift the risks. We know it. We cannot stop the risks, but if we know where our risk is, then we will be able to shift the risks. That's why insurance comes. And that time, if we know where our risk is, then we should avoid it. We should shift it from one way to another way for surviving, for good organization, for surviving the organizational activity also. So we need to sensitivity analysis understanding for our case study. So what is sensitivity analysis? It is the study of how the uncertainty in the output of the mathematical model of the system, we can apportion it to the different source of uncertainty in the input. So it is the uncertainty calculation, sensitivity analysis. And what is financial sensitivity analysis? Sensitivity analysis is a tool used to financial modeling. We know what is financial modeling. Financial modeling is that if you go for take a project, you have to calculate your cash flow, financial statement, all projected for the next 5 years or 10 years, and after discounting all, then we will be able to find out the project would be taken or not. So financial modeling, more advanced types of financial modeling are built up valuation, planning, analyzing how the difference value of the set independently. So we have to understand the sensitivity analysis. If we got time, we'll work on it. We'll do the math also. They are very much important sensitivity analysis. So we have the importance, different types of item here, and also the research method framework, how the types of, there are some framework also research that is for case study. So first we have to identify the problem, then whose purpose is, and we have to identify it and conclude with a good result. So this is that big data analysis. So different types of data problem is here in our case study database. It is only for the theoretical. So here if we see, look here. So financial analysis, another vital part for our case study. So how we will be analyzed? It is the difference type financial statement analysis. We did it in our difference level. There are some vertical analysis, some are horizontal analysis, some are leverage ratio analysis. That leverage can be operating leverage, financial leverage also, and growth model, growth analysis, sometimes liquidity analysis, cash flow analysis, valuation of our company, variance analysis, profitability analysis, efficiency analysis, rate of return calculation of the project, scenario or sensitive analysis. That type of analysis we should understand for our case study. And if we see here, one item, framework of analysis, business analysis, valuation using financial statement. So it is our common thing. Also, corporate financial management item is that. So financial management, they have the three decision. If you see the picture here, investment decision, financing decision, and dividend decision. So what is the investment decision? That investment decision we will be able to calculate capital budgeting and different types of technique we are using in our capital budgeting, NPV, IRR, PI, etc. And working capital management also a investment decision. And here capital budgeting for the long time, our working capital management for the short time within 1 year, and capital budgeting more than 1 year. So that decision help to investment decision, that type of technique. And another thing, financing decision, how we'd be able to do it? We have to understand or calculate cost of capital. We have to determine the capital structure, which type of a structure we have to funding. And this is that if you go for the loan, in the for the bank or another other thing, what would be the ratio? Debt and equity ratio. Is the 60% loan and 40% equity, or 60% equity or 40% loan, or 50% equity and 50% loan, or 70% loan or 30% equity? What would be your suitable or suitable structure? That should be understood with the financing decision. And what would be your leverage? So cost of capital, capital structure, leverage, etc., help to determine financing decision. That financing decision, one of the part of the financial management. And if we go for the dividend decision, so what would be your policy? Dividend policy. Dividend policies can be zero dividend, can be fixed dividend, can be cumulative dividend. Different types of policy we have here: cash dividend, bonus dividend, etc. So what would be your suitable for your organization? That should be reading material that for the case study of your dividend decision. And also, what would be your retained earnings? That means what retention ratio, what would be the dividend ratio? If you that means your 100 crore, if your net profit, what would happen? How much money you will distribute for the dividend, how much money you will retain, within the organization for the next expansion. That should be the dividend decision policy. So within the investment, financing, dividend, etc., health management, financial management, also the corporate financial management, through the capital budgeting, working capital management, cost of capital structure, cost of capital determination, leverage determination, dividend policy, retained earnings, and for the greater interest or fulfill goal, vision, mission of the organization, is we have to understand it. So if we see the financial statement, we know it. So financial statement, there are 5 part, though here is 4 part, is saying in our International Accounting Standard 1 para 10 said that there are 5 component of financial statement. And also that name is changing. Previously we were saying that income statement, but its name is a statement of comprehensive income. And balance sheet, it is the statement of financial position. That position saying a specific debt position. And a statement of retained earnings, it's the statement of change in equity. And a statement cash flow is the same. So here note or notes to the accounts also a part of financial statement. And if you see the financial statements, quality information of financial statement. So if we go for financial side, that we'll see that the financial data or information, it should be understandable, it should be relevant, it have the reliability, it have the predictive value, it should be feedback value, it within the time, and is must be verifiable, it must be neutral, and also comparable, and should be in consistency. All characteristics in divided in the different way. So what is that? Understandability. It is the user specific quality. Decision usefulness is the overriding objective, and relevance and reliability is the primary quality, and also predictive value, feedback value, timeless, verifiable, neutral, representative fairness, etc., is the component of a good information of financial information. And also comparability, consistency, it is the secondary qualities. And also the cost effectiveness consistent, and materiality consistent, and the constraint, so etc., all component, all characteristic, it must be within the financial data. So if we see the structure of IFRS based, liquidity based balance sheet. So what is happening here? Look here. If we see a left side here, in asset side, most liquid item would be the top one. For example, cash equivalent. Cash is the most liquid, and cash equivalent, you can, for example, you have the FDR in bank, you can easily anytime you can mature, you can collect the amount. So it is the cash most liquid item, and the hard one is the less liquid in the below one. Same way, liability ownership, the most liquid liability is the upper side, accounts payable, and less liquidity, deferred tax liability, etc. So this way, liquid based balance sheet is that, and also sometimes we have to calculate the classified balance sheet. So what is the classified balance sheet? Here, current asset, non-current asset, segregated, classified it, current liability, non-current liability, owner's equity. So all theme within the balance sheet item. And here if you see the tools of financial statement analysis. So sometimes we are using comparative financial statement. That is the difference two types. One is horizontal analysis, another is vertical analysis. Same way, common size financial statement analysis, trend analysis, ratio analysis. This is the vital component of financial statement analysis that will help to determine, or that will help in our case study. So here, if we see the balance sheet analysis, if we see the asset are current asset, fixed asset, intangible asset. Current asset are cash in hand, stock, investment, etc. And fixed asset, land, building, plant, furniture, etc. And liability, same way. There are current liability and that was fixed, long-term liability. So current liability, borrowing from the banks, trade creditors, etc. So if we see the horizontal analysis, what is that? Horizontal analysis, that means, look here 2 years analysis, one of the balance sheet. So what is the difference? How that analysis help to understand for decision making for the organization. And horizontal analysis is that what would be the difference with the base year. If we see here base year 12 and present analysis for the 13. So here if you see current asset, here 75,000 is the increase. That means 7.9% increase of the from the base year 12. So what is happening here? Here, look here, intangible asset minus 14%. Overall asset increase 15%. And same way, stockholder equity increase 15%. So based on that, we'll take another time some math on this statement also. So another one is vertical analysis, also common size analysis. So here, total asset, if you see 100%, then what would be the cash? If total asset 100%, then cash is 6.3%. And same way, in the previous year, if total asset is 100%, cash is 6%. So what is the difference between both cash? Here, 0.3% increase in cash. So what is happening that is sometimes is positive thing, sometimes negative things. Positive things that you are not able to manage the cash. That means you are keeping cash because it has some cost. If you do not invest it, you will not get the return. So here cash management is problem is here. So that type of decision can be happen. For example, here if you see the liability side, here total liability is 30%. Though liability and stockholder equity is 100%, if you think here, look here, accounts payable previous year it was 8.2% of total, but this year 7.8%. So what is happening here? What would we understand based on analysis? What would we think management? Here previous year accounts payable was 8.2%, but this year 7.8. That's mean that you paid your payable, you adjust your payable because you, that means the ratio is less than previous year. It's mean that your payable management you are doing accurately, but it is not.
I draw your kind attention, please. How to ascertain or how to determine the first year percentage payable?
হ্যাঁ, এখানে শুনেন, এখানে এই যে দেখেন 4,66,000 টোটাল অ্যাসেট, এইটা যদি 100% হয় তাহলে 28,000 কত? 28,000 হলো 6%। এই টোটাল গুলি মিলে হলো 100%। এটাকে বেস ধরা হচ্ছে 100। ঠিক
আচ্ছা স্যার, আচ্ছা স্যার, জি স্যার,
অনুরূপভাবে
জি
যে
স্যার, জি স্যার।
5,24,000 সেটা যদি 100 হয় তাহলে 33,000 কত, 33,000 6.3।
হ্যাঁ,
এইটা হলো আমাদের
that head of accounts depend on the total head of figures.
yeah. That's why it's the vertical analysis or common
Yes
set
sir.
analysis is calling that. So what amount
Thank you
is
sir.
including with that head? So here what will
Thank
be happen, if you see here accounts payable is 8.2% is previous year, but this year 7.8%. It mean that you are doing good in your accounts payable, you are paying, you are the good paymaster, but it is the negative for the organization. But look here, receivable, for example, accounts receivable, here previous year it was 12%, but this year 9.5%. It means that you are a collecting master, so your accounts receivable is less than previous year in total. So what is happening there? So you are a good accountant, so you bring the money from the receivable. So what is happening in our market, in the organization, manage the organization, management wants that the CEO for accounts people, they should pay later but receive fast. So this is the good CFO is that who is be able to manage the accounts. So receivable, that is that type of decision can be happen here. So if you see another one, look here, ratio analysis is a vital part in our sometimes one fully 20 or 25 marks can be come within the case study. So case study is a one picture, one of, for example, organization, there are different component is that there's some NPV analysis, capital budgeting, ratio analysis, can be risk management, can be taken a new project, can some decision, can be management problem, different types of problem can be happen within the case study. So ratio analysis one of them. So here if you see the ratio analysis, there are different types of ratio analysis we are doing: liquidity ratio, leverage ratio, activity ratio, profitability ratio. And if we classify it, a different way we can classify it. Sometimes we can get traditional classified. That traditional classifiers come from revenue statement ratio, balance sheet ratio, composite ratio. But we are very much familiar at this moment functional classification. Base of the function. What is that? Liquidity ratio. What is the liquidity ratio? There are three types of liquidity ratio: current ratio, liquidity ratio, asset ratio, and profitability ratio. Different types of profitability ratio is where we have to calculate gross profit ratio, net profit ratio, expense ratio, operating ratio, return on capital employed ratio, return on shareholders fund. Also leverage ratio. Different types of leverage ratio, that means priority ratio, debt equity ratio, gearing ratio, fixed capital, fixed asset ratio. Sometimes activity efficiency ratio we have to calculate it. Some debtors ratio turnover, also creditors turnover, total asset turnover, fixed asset turnover. So that type calculation we can calculate in different way. Sometimes scenario analysis. So this is the basic formula here for the liquidity ratio, working capital, quick ratio or current ratio, sometimes solvency ratio, and sometimes profitability ratio. Few ratios are stock market ratio. Look here, this is the common ratio for investor for decision making for the capital market. One is the EPS, sometimes book value per share, or price earning ratio, dividend yield, etc. is calculating here. So that type of ratio we have to calculate. Sometimes debt equity ratio. So how we can calculate it? Total debt divided by owners or stockholder equity. And sometimes debt to asset, total debt asset ratio. Sometimes coverage ratio is calculated net income before tax and divided by the amount of fixed charge. Sometimes interest coverage ratio, operating income divided by interest expense. This way, some solvency ratio, net income, that is after tax profit plus depreciation, divided by short term liability plus long term liability. So this way we can calculate the different types of ratio. and sometimes this is the we know that our financial statement is the general purpose financial statement. What we are using a general purpose financial statement. That's why all are published. Look here, if we see, for example, audited accounts is the public document, but management accounting is not the public domain. Also, the cost audit report is not the public document. Is the within the organization. Management report, MIS data, etc. for all for the within the organization, not for the general public. And the management reporting also for the within the organization for the decision making by the management. So here, general purpose financial statement. What we're saying that financial performance, that means profit and loss, financial position, that means balance sheet, change of net worth, that means statement of equity, cash flow, etc. The financial information. And within that financial information, service operating performance, that one performance environments, etc. all are the general purpose financial statement. And entities annual report include general purpose financial report and other information provided by the entity, such as overview of this change with governs. And that's why our annual, that means report also, within annual report, financial statement, audited financial statement, one of the part, major part, and based on that part, annual report. All, if we go for the if we go for the Google, that if we search the annual financial statement, there are a lot of annual research, banks, insurance, etc. All are publicly available. You can download it, you can read it. Basically, if we go ISO 1, para 10, there clearly mentioned there are 5 components of a financial statement. So that is
Five
another
component, yeah.
Yes, 5 components.
Another.
Though a statement is 4, but another one is that means notes to the accounts. It's the part of the financial statement. And also, if we go for any annual report, there are a lot of items here, 400, 500 pages. If you go for a bank financial statement, lot of things here. So policy statement, etc. So business case format, that means they are given a problem and we have to solution in different way. That means based on your thinking, internal thinking, your calculation, your result, and that means a case study result can be different, you and another one, Mr. X and Mr. Y, cannot be the same. So your logical thing is different, but few thing. For example, any statement. For example, within case study, given a project for calculating the NPV or projected PI, so that answer should be the same, but comment cannot be same. But any theoretical item that can be differ each and every one, it not would be the same, but the figure item calculation, that should be the same because we are using the same formula. So case study is very man to man thinking difference. So case study in a study, so we have to um, understand all subject. They are using different method, using data, using our confidence, using our learning, using our previous understanding, using our that means a study, all within the case study. So this we can be fulfilled in our case study paper. So it is very much important for us. We have seen and our in our CGA, there are 3 basic items within this paper: financial information analysis, strategic operation and ethical analysis, and effective summarization. So this is the weight here: 35%, 35%, and 30%. So when any question setter will make the question, they should think about this item because financial information analysis related, that should be 35%. So within that analysis here, what we have to do, we have to the valuation, we have to do the that means capital budgeting item, sensitivity analysis, risk analysis, etc. within that information line. And 35% is strategic, operational and ethical analysis. So another 35%, that is strategic, that means for taking any decision or ethics analysis, that type of, for example, you are a CFO and your MD wants to say that and go for the different way calculation the inventory. For example, we have the inventory valuation as per IS2, and there are we know the that means FIFO, first in first out, weighted average, and last in first out leaf is banded by the standard. We cannot calculate it. So if your management wants to say that, do that way for fulfillment that the difference way. For example, if we go for inventories FIFO valuation, that what will happen? Your income will be high, your profit will be high, your tax will be high, because what item
Yes, sir. Yes, sir.
what item you purchased in previously, that price was less. And if we input in your production, we know there are three items, our production item. One is material, labor, overhead. It is the element of cost. And if your one element of cost is less, then your profit will be high, because sale level more or less was equal. So if we use the LIFO, last in first out, what will happen? Then your cost of production will be high, because what item you purchased just recent, this the price is more than previous purchase. So what is happening? Your profit would be less, as well as your tax would be less. So difference way calculation, but as per the IS2, you cannot implement your LIFO formula, LIFO method. So if your management wants to that, so you cannot do this, is the legal or ethical, or also some that means artificial few item management wants to say that if you are CFO, management want to say that that year is the last year of the MD. If performance would not be good, then next year his extension would not be happen. So they urge you, CFO, you are a CFO, the management MD says that please do that and increase the profit. Show that for pay saving of the MD for next year extension. If you do that, so it is the ethical issue. As a professional, we cannot do that. So that type of item within the case study for here is 35 marks. And another effect is summarization. So what is happening? All thing doing, and you have to summarize or your executive summary of the case study within that item, 30 marks. So here all logical thing, all summarization linked to each and every part, it all within the summarization. So that is 35. So here is 100 marks. So we have to do it. Basically, CGA, though, is a new institute. So, but it's that type of education, you know it, all are within the systematic. What we learn today, we have to make the valuation in different way. We have to do the item as the valuation is different way. We have to short analysis, paste analysis, most analysis, sensitivity analysis, that we should understand, we should study later on from the next class. And here we have to understand in different types of analysis, and our next class would be short analysis for the case study, EVA valuation, EVA, that means economic value added item, Potter's 5 force model, paste analysis, smart এবং business valuation, সেটা would be our next class. যত ভ্যালুয়েশন করবেন আপনার তত লাইফটা স্মুথ হবে। যে যাই বলুক, আপনার মনের ভিতরে থাকবে এটা আমার জিনিস, আমার জীবন, আমাকে করতে হবে। কে কি বললো হলে কিচ্ছু আসে যায় না। প্রতিষ্ঠান ভালো হবে, আপনি ভালো হওয়া মানে প্রতিষ্ঠান ভালো হওয়া, প্রতিষ্ঠান ভালো হওয়া মানে দেশ ভালো হওয়া। আলটিমেট আমরা সবাই দেশের জন্য কাজ করব। আপনাদেরকে অনেক ধন্যবাদ, ভালো থাকবেন, আবার আগামী সোমবার দেখা হবে। ইনশাআল্লাহ। আল্লাহ।
আসসালামু আলাইকুম।